What's up, everybody? It is Mike with Daily Stock Fix. This is my second video of this channel, and it'll be a good one. It's not going to be as, I would say, as boring as the last video, even though I went over some good lessons on the last video. It's more of, we're going to be going over something very specific, which is first green day reversals, or others who follow Tim Sykes very closely know it as the number 5 pattern off the penny stocking framework DVD. And then I'll finish it off with just going over the watches, what I'm looking at, why I'm looking at it. I'm not going to do the whole, play through the whole stock. You guys can, if you guys want that, leave it on the comments below. Then I can make one specifically for one pattern, so you can see how I normally attack those. But for now, we're gonna try to keep this nice, short and sweet, so you guys can get the lessons quickly and use more time to study other content. So first things first is the number one stock that I was talking on, that I think is the number one stock, right? Because I just know this pattern much better than the other one, which I'll go over, which is AVEO. This is DCTH. This is a beautiful chart, at least for me, because I've played this. I've been almost not necessarily an expert, because you need a lot of hours for that, but this is one of my go-to patterns. First green day reversal. As I said, it's also number 5 off penny stocking framework. Now, why this pattern? Why am I so in love with this pattern? A lot of reasons. First reason is that it always happens, regardless if it's a stock moving that is not being pumped. And by the way, there is no, according to what I've seen, there is no newsletter pumping DCTH. Right now, we just have all these low price stocks spiking because it's a shit market. Not necessarily a shit market. I mean, it's a pretty good market. It's uptrending again after the 2% decline from all the tech stocks. But it's a speculative market where everything is starting to push up. And as Tim Sykes, usually when all this crap starts moving upwards, it tends to mean a crash, like a large crash. And we are moving into September. It's July, September, October time, and especially November. So September, October, tax loss selling begins. That's a tax loss selling season, and we're going to see a lot of these companies no longer exist because everyone's just doing tax loss selling. By the way, if you don't know what tax loss selling is, basically imagine this, right? You are invested in a lot of stocks, right? Because you're an investor, and not all companies may do well, you're going to have losses. It's just how it works. Us as traders, we take our losses instantly, but investors, they don't, especially mutual funds. So all these giant institutions and mutual funds, they are selling their stocks that they have losses on so that they can count it against their income. So say, for example, would you rather, you would want to sell your stock because, say if you have $2,000 in losses and hypothetically your annual income is $10,000, you'd write off those $2,000 against your income. So your income is realistically only $8,000. So now you pay less in taxes. And that's the idea behind tax loss selling. Now think about this for large institutions where they are invested in these huge companies. And also there's hedge funds, mutual funds that are not mutual funds, but hedge funds that are and different funds that are invested in these shitty companies. So you will see a lot of that coming in. And right now we're approaching it. It's July, August, September, October. So we have a few months. And right now, expect this, because it's summer, and summer has all these, people are just trying to are desperate to find the next play, right? Summer is typically slow. So right now, as soon as one thing starts spiking, which these small market cap companies that have a small float, as soon as they gain any volume, they become a hot stock, and everyone jumps on it. And it's crazy actually how many stocks are moving up right now. I'm not surprised, but it's fun. Frankly, it's really nice seeing especially like this chart pattern. It's nice seeing this chart pattern come up again because it doesn't always come up. It comes like maybe a few times a month. Anyway, enough with all the all the blabber. But we're gonna go straight into why I like this so much. Right. So there's reasons why this works. First green day is defined by a stock that has this large run up, 1, 2, 3 green days, right? Even though this is a red candle, it's still held green, right? It's still above the closing price of the previous day. So it was a green day. Now it had its second almost red fake out day here. Then it had this day here, okay? Between this day to this day, it's down 10%. Between this day to this day, it's probably down 10%. That's where you actually have to do some math. And of course, no one likes math, but we're going to have to do it because we have to, just for argument's sake. This is typically what I do whenever I'm looking at stocks. I want to find out if something is under SSR. Now, SSR is defined by a stock that is down 10% or more intraday in the day. If it is down 10% or more intraday on the day, it is under SSR for that day and the following day. Okay, so even if something, say, the low of a company is 10%, but then it spikes and it's positive 30, it's still down 10%. Therefore, that is under SSR, and that SSR also affects the next day. Right now, what does SSR do? SSR doesn't allow short sellers to short sell on the ask, right? So like you can't just pound a stock down by selling and selling and selling it until you get your profits, and that's what a lot of mutual funds and people with big bankrolls can do in a stock that is under SSR. Obviously, you can't sell into the ask, but you have to wait for an uptick. So you have to wait for someone to buy before you can sell again. And that's just how SSR does. So imagine when you're a short seller and now you have these limitations when you're trying to short sell a stock. If a stock is under SSR, you can't be as aggressive on the stock. Every time it perks up, yes, you can sell onto it. After that, then you also have to consider all the other short sellers that are trying to get into that position. So you want to find a stock, one of these spikers, that are under SSR, and you want to look for a green day. So you look for an overextended stock, 1 day, 2 day, 3 day, right? Usually the 3 day rule. If you watch Trading Tickers, Tim Gritani talks about this a lot. Typically on the third day. Also Tim Sykes talks about this. Usually on the 3rd day, that's the beginning of the end. And if not, shorts get squeezed and it continues spiking for 4 or 5 days. In this case, we had a close of 26. Right, so let's see, 0.26 minus, and we went to a low of 18. I don't even have to do the math. That is 8 cents a share. 8 cents a share off of a $26 stock. 0.26. That is 30%. So easily, it's on this day here. It's under SSR. Okay, so because this day is under SSR, this day is also under SSR. And now we have to find out what the next time is going to be under SSR. So now we got to figure out if this day became SSR, so it affects the next day. And after a while that you do this over and over, you can pretty much just eye it and tell that's under SSR. Thinkorswim doesn't have anything where it says under SSR. I think other platforms do, but I work with what I have. So we'll focus on this one. This one easily will be under SSR. It closed at 23, and then the low was 10. So we had a 13. Yeah, we had a 13 cent loss on this stock. So if we calculate that, that is a 56% drop on this day. So of course, this stock is now under SSR, and because of that, like the rule implies, this day here, this green candle is also under SSR. So you always want to pay attention to these stocks that are under SSR, because if they gap up, and especially if they gap up on news, it's a potential buy, because shorts are going to cover their positions, and thank you. Oh, someone brought me water. All right, so shorts will cover their position, and also buyers will see that shorts, that the stock is squeezing, and therefore they're going to buy that momentum. Now let's look at the intraday. So here we have the intraday. Let me get rid of these alerts. I typically like stocks that gap up. In this case, this stock did not gap up. That can sometimes work in your favor, because what if it gaps down, which in this case it gapped down, right? It closed right here around the 16s, and it opened, let's see if you can see this. So it closed here at 1620 or 0.16.2, and it opened at around 14. Right at the open, is it under SSR? Well, the difference between 16 and 14 is 2 cents. Likely not, because 2 cents is barely, we'll figure it out. So I see 16 divided by 16, 12%. So yes, right on the market open, the stock is already under SSR. And because of that, you want to keep it on your watch, especially because it's a recent spiker and has great volume. So as soon as it pulls down, it pulls down to around these two levels, around these two support levels there, and also there, but that's not the price action I'll wait for. Whenever I look for these stocks that are under SSR, I typically like buying the first pullback or the breakout over the first high, the morning high. And that's exactly what I aim for. In the Instagram post, I'll go over it in a bit. I wanted to buy at 20, but I was busy going to medical stuff for the whole transition thing from military life to civilian life. So I didn't have my eye on the stock. And that's unfortunate, you miss trades. But this pattern still fits my exact strategy. Buy that afternoon high of day breakout on these first gap ups, or these first reversal green days, or number 5s, whatever you want to say. This even works with pump and dumps. It's crazy. It's the first green day, number 5. Oh, wow. It's patterns. But you can buy into the spike. I don't like doing the morning spike because I've seen plenty of times. Let's look back. Let's look at the daily chart again. So if we look at the daily chart, you've seen that it has morning spikes before. It spikes in the morning, and then it gaps, or then it just tanks, right? Spikes in the morning, tanks. So if it opened here, you'd probably see another spike up to maybe at most the 18s, and then it comes down. But the only thing that you need to also see patterns, right? This is all about pattern recognition. You see right here, the spike never went above the previous close. Here, this spike here also never crossed beyond the previous close there. This stock did break past the previous close at 15. So let's see how it reacted at that level of 15. We'll go back to the intraday. Look at that pullback. So it broke past that, pulled back, and then continued spiking straight up to the 20s, right? From 16 to 20, 4 cents a share. That's 20% gain from that first pullback. That's nice. That's basically it confirming to me that it's going to be a first green day. However, I still would not trade it, because if I buy here, what am I going to risk? I'm going to risk about, like, the next support is probably around here at the 14s. So I'm risking 2 cents a share off of a $16 stock, which is roughly 8%. That's too much for me. That's a lot of risk. So what I look for is for better setups. You always want to find that better setup. And this setup up here is ideal, because it's a confirmed breakout at this point, and it's the predictable part of the move. If once it breaks out past here, you buy on the break over that 20-cent level, and it's just grinding all day, but it's holding above that breakout. You want to look at the big picture in the intraday. Now, you could buy it on these dips, maybe buy it here when it's probably like an A, B, C, and then the D is up here. That's too much guessing. I don't like doing that with this chart pattern. That's too much. So what you do is you focus on what you can really look at and understand immediately. You don't want to have to do guessing games. And I think the Wi-Fi here is down because I have reconnecting. So 1 second while I turn on my mobile hotspot so I can connect. By the way, guys, my situation here is not ideal. I am I'm kind of relaxing, and yeah, here you go. My Wi-Fi just died while I'm recording this. That's fantastic. Let's hope my hotspot comes up. I won't be able to load any charts, so we'll just continue working off of this until my hotspot pops up or the Wi-Fi comes back up. So when I saw it, the stock was already around here at the 21s. In the Instagram post, oh, I think my hotspot came up. Yep, there it is. My awful connection. Super exciting. Let's hope it connects. Yeah, guys, this internet's bad. It just drops in and out. So whenever I'm trading, I have to be connected to my mobile hotspot. In this case, this building was made back in like the 1960s, so it's made out of like brick and lead. So Wi-Fi isn't that great because maybe there's some rats in the wall that are eating the wire up, and also my hotspot isn't that great because it's T-Mobile. Yay, T-Mobile. So continue talking about this. I saw the stock here at 21. If I bought at 21, I'm risking down to the 20s, and that is a 1 cent risk. That's a roughly a 5% risk, and the reward. You know, I was looking at the reward, seeing like what I could potentially make. And then you have to look at all this. See, my Wi-Fi is completely down now. I can't even look. This is so unfortunate. Come on. Let's not make this video longer than it needs to be. Yeah. This is my life, guys. Military. Woo. Thank you, Marine Corps. Thank you, DOD. Thank you, United States of America. I'm doing my time. I got 6 months left. I cannot wait to fucking get out. I cannot wait to get out. All right, real-time data. What am I connected to? Woo, it's back up. I don't know what I'm connected to. All right, my phone. Ooh, my phone hotspot came through. All right, so back to the chart. What is the potential risk to reward, right? So we already established that if I bought somewhere around the 21s, right around there, which is that low area there at the 21s, we're risking that much. Potential reward, I would say right around there. The reason why, so if we scroll back in time, you can see right here. A top there, bottom there, bottom there, bottom-ish there, top there, top there, top there, and right here it's kind of hanging out, and after that it just tanked, right? So risk to reward, we have a 1 cent risk to a 3 cent reward. I'm looking for something a little bit more than that, especially considering how much volume is being traded on this and how volatile this stock is. I don't want to hold for a 3 cent risk to reward. If it was just tanking down the entire time, there's no bounces like this, I would love to buy this. Or say I bought it down here at the 17s, which is probably the best place to buy considering there's so much support here. The reward is potentially up to the 20s, so you have a 3 cent, but down at the 17s, 3 cents is worth a lot more than up here at the 20s. So I didn't really like the setup, although I know the setup. I've done it many times before, but I hesitated because the risk reward is not that great. I'm looking for something bigger. Maybe it's because it's a sub dollar stock and it just messes with my head, but it's not good enough. We can see the high here at 24. So just consider, yes, the risk or the potential reward is at 24, but at the same time, people are going to start selling before 24. They'll probably start selling around 23.50s. And you have such a, what is it? We're looking at about 12% gain, 15% gain. With these type of stocks, I'm looking for 20%, 30%, because that's how this pattern is supposed to work. I didn't take it, so oh well. At least you guys now know how this works. I hope if you have any questions, please don't be afraid to ask me in the comment section. Just remember, you want to look for stocks that are under SSR, which is whenever stock was down 10% or more on a day, on that day that's down 10%, it is under SSR, short sell restriction, and the next, which means shorts cannot push the price down by just short selling it over and over. They have to wait for upticks, right? Not only that, ideally, you also want to wait for the stock to have a press release here. Let's see, what's that stock that I remember? I'll go over it right now. So ideally, you want it to come down again. So this day, or gap up, but also gap up on a press release, because in that press release, it's going to cause shorts to squeeze. I'll go over POLM, show you guys what happened there and how similar it looks to this. But also, this is a nice setup too, because it's likely that it's going to spike the next day, because shorts cannot short sell the crap out of it like they want. Because it gapped down, this is under short sale restriction, right? We ran over that. And even then, it was under short sale restriction because of the previous day. Now, because it went down 10% on this day, tomorrow, it's also going to be under short sale restriction, which means tomorrow there'll also be resistance for the short sellers to be able to just short the crap out of it. So, in other words, the only real issue is a resistance up here at 24, and also really how aggressive shorts want to be. That's really it. Shorts can, if a stock is under short sale restriction, they still can push it down. It's just a lot harder. So, yeah, you just got to keep that in mind. I was going to go over POM because it looks very similar. The chart pattern is pretty much the same. And this is a while ago. Here we go. I love this chart. It looks very similar to a pattern I have. Let's see if I can find it. I can go to my Instagram. Yeah, that T-Mobile internet. Okay, so you can see here, here's my post about the DCT. Oh, that reminds me. That reminds me. Okay, I'll go over that rule afterwards. And what I'm referring to, that I'm like, oh man, that's actually a good thing I should talk about, is the intraday breakout starting at 1 p.m. Eastern. Right? If you don't know that already, you should definitely be paying attention to the market at 1:30 p.m. Eastern. Actually, a little bit prior, 15 minutes prior, 15 minutes prior, the military rule, 15 minutes prior to 1:30, because at 1:30, for some reason, volume just increases and things start, ABCD patterns start forming, and also intraday breakouts start forming. So here it is. You also have resistance at 24s. Blah, blah, blah. Let's go to the next one. Let's go here to my account. All right, here we go. So DCTH is making bottom on dip, blah, blah, blah. Classic number 5. SSR tomorrow because it's down today. Congrats all along. Of course, exactly what I just said today. Now I want to talk about PULM. PULM. Oh, look. Check this out. Is this PULM? I don't remember what stock this is. This is not PULM. It's something else. I forget what stock that is. But we're going to go down to POM, which is, oh, there's that stock we were just looking at. Which one was this? MOSY. Look at that. It's a, no, I don't think this one. Yeah, this one also was under short sale restriction. Right here we have green day, red day, and then it gaps down here 10 cents or like 12 cents. So it's under short sale restriction here. Here we have a gap up and then a spike. Right? So always look for these patterns. We're going to go to POM. Where are you? Where are you, you piece of crap? AVEO, don't need that. You guys really need to look at like, I don't just post random crap. These things are, I mean, aside from the last few weeks, because the market was kind of, me and Tim Sykes both had shitty fucking last few weeks. But aside from that, these patterns are solid, and I'll go over the POM so to show you exactly how this pattern should work and how it's worked in the past. When I find it after my T-Mobile internet works a little bit faster. Come on. Where are you? Oh, here we go. All right, let's see what I wrote here. POM 5, risking, blah, shorty stocks. Okay, so, God, I hope you can see this. So I can zoom in. Okay, so this stock, I know you can see this. I know you can see this. So here we have that first green day, right? Then it tanks, obviously down for 10% here. So short sale restriction applies to this day and also the next. Then this day here goes down to another 10 cents, right, from the previous close. So now that is under short sale restriction. And after that, kind of just hangs out right above 10. And because it holds support above 10, sorry, not 10, above 1. Because it's holding support above 1, then the company releases a press release and it spikes it, right? That's why there's a massive surge in volume. Then it comes up 1, 2, 3, and then after the third day, it comes down. It's down 30 cents under short sale restriction, closes there, gaps down under short sale restriction on this day, and then the next day gaps up, spikes on another press release. And by the way, every time they had a press release, then they announced a financing, and then it came down. So they're manipulating this really, really well. Then we have 1, 2, and then the third green day, it comes down, becomes red, right? So obviously you'd want to hope for another green day. Now let's look at how it turned out. Here we have POM, same stock I was looking at Instagram. I wanted to show you that it's on Instagram so you know to look at my Instagram to find out if these patterns still work. So here it come up, and we have this green day. It gaps up, and on the gap up, it spikes. Gap up, spike, because it's under short sale restriction on this day. You need to pay attention to these stocks under short sale restriction. First green day is defined by a stock that is overextended, right? So let me go here. It's overextended. Come on. Not gonna cooperate, huh? It's overextended, right? This is clearly overextended. 1, 2, 3, 4 green candles. I look for 3, but a large overextension. So this thing I'm already considering. As soon as I see this day, it's on my watch list because it's under short sale restriction. The next day, still on my watch list because it's under SSR. Then the day after that, gaps up, spikes on a press release. You need to pay attention to these stocks. Only because you missed the upside. Well, where am I going? Only because you missed the upside does not mean the stock is done. There is still room for continuing squeezes. And that's just because shorts are really aggressive and shorts are dumb. So I know shorts also want to keep profits. So they're going to buy to cover, right? Which is what causes this. A lot of shorts that have been shorting all this, 1, 2, 3, shorts usually cover after the second day or on the second day. So shorts are covering on this first green day, especially when there's a press release that is good news. And not only that, momentum buyers jump in. And not only that, all these other traders that see this as a top percent gainer also jump in. So you have to pay attention to these stocks. Keep these stocks in your watch list. Look at my watch list. My watch list is huge. A lot of you guys probably have like 5 stocks, right? I have every stock virtually every stock that has ran up in the last few weeks, right? So let's look at it. Let's go over my watch list because I told you that's what I was going to do anyway. I already got everything out from the watch list of what of top percent gainers. My scanner that I also have a DVD, not DVD. I don't have a DVD. A video on my previous channel. I'll link it in comments below or the description below, so you can follow that, so you can set up your scanners like I do. But we have DCTH. All right, let me zoom in a little bit. DCTH is a runner now on first green day. We have AVEO. So say maybe you're like me and you don't like buying the front of the move on this one, right? Because this shit's really scary. Like, I don't want to buy these because I've been burned before, and I just don't know how to play the front side of the move for these guys. So you wait for it to have the first red day, then a second red day, and then hopefully the next day it has a green day, right? And make sure it's under short sale restriction. And because this thing is trading such a massive volume, we're talking about in 2 days it's traded almost 130 million shares. Because of that, it's still going to be relevant after the couple of red days, because people are going to keep it on their watch list. This is a big ass mover. MARA, right? This is not a huge spiker, but we have that crazy volume, and that's because, like I said, it's summer. People are just trying to find a stock to trade. That's really what it comes down to. It doesn't matter what the fundamentals are. This market is pushing stocks up because there's nothing else going on. And now that people see that, wow, this cheap ass penny stock went up, let's see if this cheap penny stock will go up. And it's just it's a crowd. It's a crowd effect. Dexter. All right, well, I call it Dexter. It's Dexera. This one, I don't know why I have it on my watch list, but I obviously don't have it highlighted. As you can see, it's black. This thing's just dying, and you can see even on the downtrending, while it's downtrending, it's still trading millions of shares. But of course, it's under a sub-dollar, so million shares doesn't really mean much. MBRX, right? I didn't buy this breakout. Yeah, I just didn't buy it. Why? Because there was no real clean pattern aside from this. If I bought there was resistance above at 36 and also 140. So 136, 140. Now, I probably should have paid attention to, what was it, Mark Crook's, Mark Crook's volume video, and also Tim G's DVDs, where he says, like, he's not really worried about, spike days or resistance that doesn't have a lot of volume. I probably should have listened to that, but, at the same time, I was paying attention to DCTH, so there's a lot of good setups right now, and you just have to pick the one that you want. And I missed both of them. Oh well. FINL. This one's an earnings winner that's on a secondary spike. However, it's a high price stock, and there's a lot of resistance up here at the 14s. So that's why, once again, I don't have it highlighted, because it's not ideal. Fred, we got this one spiking on okay volume, nothing really crazy going on. So I just have it on the watch list. It's high priced. Well, I don't know why I have it highlighted. So LINU. Oh, it's my Wi-Fi, or it's my internet that's being slow. It thinks that it's highlighted. So LINU, wow, my thing's glitching all over the place. LINU, why do I have this on my watch list? All right, this is not necessarily one of my patterns, although I can argue that this is for sure my pattern. This is definitely my pattern. This is what I want to show you. This is what can really happen with this first day reversal, right? The volume is not so great on this one, especially because it's only trading like 2 million shares on a sub-dollar stock. Dollar-wise, it's not a lot, but still, the chart pattern remains. We have overextended stock, especially this is on earnings. So it went up 1, 2, 3, 4 green day before it went red on this day. Then it had 10% down, another 10% down, and then it gapped up, had a squeeze, and then it gapped up the next day. And that's what I think is going to happen with DCTH, right? If we look at this, very, very similar. We should see a gap up to the 24 areas, maybe 23s, 24s, somewhere around there. It's the same fucking pattern. You need to pay attention to this. You gotta pay attention to this. I'm not telling you because, like, I know I don't have enough subscribers so you guys to push the price up on any stock I'm going to get on, but this is just a number 5 pattern. You have to educate yourselves. You go buy, penny stock and framework DVD. If not, just pay attention to my posts. I don't post all this writing just to write and train my fingers, make them stronger. I write so I can teach you guys these patterns. This is free content for you guys. Yes, I'm not a millionaire. Okay, I'm not a millionaire, in case you guys didn't know. But these patterns is what Tim Sykes teaches, right? Tim Grattani doesn't teach this, but I'm sure he trades it. Let's see. So that's LINU. As you can see, as it progressed, actually, this is LINU. As it progressed, it has never broken past that 59 level, basically the 60 level. As you can see, even here, back on this day, it was resistance. So that means if it can break that 59 level, this becomes a breakout, a major daily breakout. It becomes a breakout over this high, over that high, not really those highs, but also this high. And from there, we can get a squeeze from the 60s, maybe to the 70s or the 65s. You can make a nice 7%, 10%, 12%, 50% gain, right? That's what I'm looking for. Hopefully, they release a press release. Not only that, but not only do you have that resistance, but you also have this trending support, right? Got this trending support moving upwards. So this is a clear grinding action towards that breakout level. And I'll show you a couple more stocks that I have like that. All right, so that's why I had this on my watch list. TMPS, right? This is a major daily breakout. Not necessarily a first green day, although it can be. It's just the volume is atrocious on this thing. It is a $1 or was down here 30-cent stock, and it's only trading 800,000 shares. So it's not really my pattern. I need something that's trading a lot of volume. Once it breaks out, though, that is a nice breakout. I missed that. I didn't have it on my watch list. I got on my watch list after it broke out and it popped up on my top percent gainers. So I'm still on the watch, and maybe it'll come down and we have a fucking first green day, right? That's why you got to look at these. Just keep them on your watch list. Make a new watch list. Say recent runners, right? Keep them on your watch list because they do have them. Let's see this one. See if it works on this guy here. So this thing, yes, it's a red candle, but it's not negative on the day. We had the gap up. Here's 10%, This day it's under SSR. So you have that gap up and spike. Sorry guys for the helicopters. I am on a military base to deal with it. So this is under SSR. It spikes up. Yes, it did hold green on the day. Don't be confused by that red candle. It did hold green on the day, and the second day it gapped up. Amazing, amazing, amazing how well this pattern works. MOSY. Oh, and the reason why I bring this up is because obviously there's a breakout coming up at 168. Buy at 168, resistance at 170s. It breaks past 170s, it goes to the 2s. So definitely on my watch list. And you can see the volume perk already. So people are getting excited about it. MOSY. This guy, not necessarily anything going on. Just have this on my watch list because I'm looking at it. I'm really, like I said, I don't have it highlighted. There's reasons why I don't have these guys highlighted. EKSO, still hot, I think. Yeah, this guy here, first red day. You know, hopefully it comes down around the 2s, holds 2s, and maybe it starts popping back up because 2s is that mental number. I remember I was buying it right here at the 224s, and I sold for like a 1 cent profit. Freaking so stupid, so pathetic. All right, CNVA. This is just one that I was buying. If you guys remember that post, I was buying it down here on the first earnings day at 940s, gapped up, and then you know, I took this little part of the move right here, and now it's at 23. Fuck me. Oh well. You know, hindsight's 2020. Here we go. The SDMO. There's another thing I think I posted on Instagram. It's a nice little breakout, a little slow mover. It was an earnings or a breakout on previous earnings, so it is uptrending, and I'm still watching it just to see what might happen. But I don't have it highlighted because it's not really interesting. GLYC. This is a recent spiker, and I still have it. Maybe it can retest at $16. We'll see. CVRS. I don't know why the fuck I have this in my watch list, so I'm gonna take it out. WKHS. If my internet loads. We have guests. All right, so I'm back. So WKHS was just a recent spiker that Tim Sykes was buying on the near the breakout here, and it went up to almost the 5s, and now it's downtrending. I'm not really watching it, which is why it's not highlighted, so I just have it there just in case something happens. ADAD. This one is a fantastic pump that is moving right now, and it looks like it's uptrending. It looks like it's slowing down, which is not good. I love it when these stocks, when these pumps can, you know, they crash. They have that first green day, you buy for the gap up, then it continue going up, and then they come back up and retest the 75 high and break out. When they break out, I buy. I don't care what people say. I buy these OTC breakouts. Right? This is an OTC. Whenever these guys buy, it creates this massive buying pressure. All the shorts that were shorting up here are buying the cover, and that creates this massive squeeze, and it continues going. All right, and I'll show you. Let me actually show you a chart pattern right now of how that works. We go to personal. We go to pumps. I've taken keep track of all the pumps, all the recent pumps. Let's see. Oh, here we go. Let's go to triggers. No, that's not it. Zeno. Here we go. Here's a nice little pump. So that breakout there caused a big buying pressure, spiked up. Right. Let's continue going. Here, this guy right here. So it takes a while, but when they do, they break out really well. That breakout there, you can see it works really well, and also that breakout right there. So I'm waiting for that on ADAD. Hopefully it does, but if it doesn't, you know, I'll probably short sell it when it looks weak. We'll see. CCCR, nothing really going on either. It looked nice on the breakout here, and it was just a small gain. It's just choppy, so that's why once again I don't have it highlighted. MYO, this was an recent IPO. I think Super Trades is buying this, and I'm just waiting to see if it can ever curl back up, and if it can't, whatever. But like I said, don't have that highlighted because of reasons. CMTL is moving towards that breakout today. It had a nice little perk up. We might have a breakout, and it's also previous earnings, so we'll see. We'll see what it can do. So I have it highlighted because it's a definite watch. EPTI. This is a pump. All right, you can look at. Let me bring it out actually. Go to trading. Man, that's in town. Where is it? Where is it? Stock promoters. So I go here. I think I've shown you guys this on the last video. Right. So let's check out what was the stock. EPTI. So if we go to EPTI, we can see that's getting promoted. Right. We have stocks promoted for EPTI, EPTI, and they've been compensated. It's the amount of $27,500 USD. All right, so they've been compensated, and this is a pump. It's a clear pump. If you look at the intraday, which will go to the 5-minute, 15, no, we'll go to the 10-minute, 30. This is a clear pump. This nice price action is really nice, but you can see right now it's close to breaking out. So yes, I am considering a buy. If I miss it, oh well. But this is a good pump. I like this pump. This is going to be a really, really strong pump. I can tell already. All right, so we're almost done with this list. BRGF, this is kind of a pump, but it now looks like it's just boring, which is why I don't have a highlight. TCCO, it's a nice breakout here, and now it's kind of boring. First red day after 3 green days, 1 to 3, but not really anything cool, which is why I have it not highlighted. SSTI, this was also another one that I think I was trying to buy here, 14, so I don't remember, or I thought about buying. I never really moved anywhere from there, so whatever. DRNG, this was a pump. You can, like I said, here's a number 4 pattern. Number 5 is a bounce. You buy on the first green day, gaps up. Just typical number 5 patterns. MRMD, this is not a pump. At least I don't believe so. The reason why I'm watching this is because since it's an OTC, and I know that OTCs tend to continue running, I'm waiting for it to break out past the 83.5 high. And if it does, I buy, make 20 cents a share when it moves up to $1, because $1 will be that major mental resistance. Last one, gents. Last one. ADOM. All right. This one, why am I watching it? Not really sure, but maybe because of the 1166 break, if it ever does. But it's just trading terrible volume. And like I said, I don't have a highlighter for that specific reason. So for sure, definitely watching DCTH. If we look at the after hours, it's kind of just going sideways. We'll see what it can do tomorrow if it gaps down or starts moving up or down. AVEO, nice gap up. I did post on Instagram. For you guys, those of you guys following me, I did post on Instagram. AVEO looking pretty strong. It's closing pretty strong, so possible gap up. Here we go. All right, got a few minutes late. Oh no, that's not the one. Did I not post it? Oh no, my bad. It was not on Instagram. Yeah, see, this is why you guys gotta follow me on all my social media. My 13 followers. You know, kudos to you guys. Whoever's on. Well, I probably should follow this guy. I already watched his DVDs. Just like seeing his journey. So let's see. Let me go to tweets. Just tell you guys. All right, AVEO closing strong. Possible third green day. You know, and of course I talk about all the other stocks I was talking about today. And that's exactly what's happening. It's gapping up. So it was a buy. There was buy signals there. You know, and not only that, it's on this third green day or second green day with large volume, so it could definitely gap up. So we'll see what it does. But aside from that, guys, that's it. Mostly what I want you guys to pay attention to is, of course, what we're talking about, the main lesson of the day. First green days. First green day reversal. The reason why it's called a reversal is because when it goes up, it's overextended, then it reverses. It's a huge momentum shift, so everyone's panic selling, and then all these shorts are crowding in, and then it has, again, another momentum reversal, and then it has a first green day. So now short sellers are buying a cover, and all the momentum buyers are jumping in and has a gap up. All right, we'll see if it gaps up tomorrow. If it doesn't, I'll slap myself. You guys will hear it in the next video I make, and if it does, you guys all owe me a follow. That's the deal. All right, guys, y'all have a great evening, and keep studying, keep working on it, because you gotta. This is it's not easy, but it's so worth it. Peace.